All right, let's dive into a topic that is absolutely key if you want to get a feel for the market's pulse. We're talking about the change of character. You know that feeling, right? You're watching a trend, it's moving strong, everything looks great, and then boom, it just flips on you. And you're sitting there thinking, wait, what just happened? What did I miss? That feeling of being just one step behind is exactly what we're going to tackle today. Well, that first little hint, that tiny sign that the momentum might be fading, it actually has a name. It's called a change of character, or CHOCH, if you want to be quick about it. Think of it as the market whispering to you, hey, you might want to pay attention now. Okay, so let's get right into it. What are we actually talking about when we say change of character? So simply put, a change of character is the very first signal that a trend could be running out of gas. Now, it's not a full-blown confirmation that it's over, not at all. It's more like an early warning. Think about a classic uptrend, right? You've got your higher highs and your higher lows, just like the textbook says. A CHOCH happens when the price, for the first time, breaks below the previous low. It's that first little crack in the pattern, and it's a huge clue that things might be getting weak. Now, this is super important because this is where a lot of people get tripped up. You have to know the difference between a change of character, or a CHOCH, and a break of structure, or BOS. They're not the same thing. A CHOCH is the market asking a question. It's asking, hey, is this trend getting a little tired? It happens when a small, recent low gets taken out. A break of structure, on the other hand, is the market giving you an answer. It's shouting, nope, we're still full steam ahead by breaking a major high in the direction of the trend. So one hints at a possible change, the other confirms the trend is still very much alive. Okay, knowing the theory is one thing, but spotting this stuff live with money on the line, that's the real skill. So let's look at how you can actually see this playing out on a chart. So here's the sequence. First, you've got a nice, clean trend. Let's say it's an uptrend. A clear series of higher highs and higher lows. The market pushes up and makes a new high, exactly like it's supposed to. But, and this is the moment that matters, on the next little dip, instead of making another higher low, it actually drops and breaks below the last one. That violation, that little crack in the armor, that is your change of character. It's kind of like the first dark cloud you see on a perfectly sunny day. Doesn't mean a thunderstorm is coming for sure, but you'd be smart to keep an eye on the sky. So what's the big deal? Why should we care so much about this one little pattern? Well, spotting this early signal can give you a serious edge. Because this is all about being proactive, not reactive. It's your earliest possible warning that the trend might be in trouble. For you, that's a huge prompt to take a hard look at your positions. Maybe you tighten up your stop loss, maybe you take a little profit off the table. It's a critical moment to manage your risk. And hey, if you're a more aggressive trader, it might even be the very first clue you get to start looking for a new trade in the other direction. All right, now for a reality check. This is just as important as everything else we've talked about. We have to be crystal clear about what this signal is not. I really love this quote because it just nails the concept. A change of character is not a guarantee, it's not a crystal ball. The market can absolutely pull one of these, make you think it's turning, and then just rip right back in the original direction. This signal is not a command to just jump into a trade. It's not the final answer. So what's the real takeaway here? It's simple. When you spot a change of character, it's your cue. It's the market tapping you on the shoulder and telling you to stop scrolling, zoom in, and pay much, much closer attention. It's your signal to start looking for more evidence, to be more alert, and to really analyze what could happen next. See, once you understand this concept, you're not just blindly following a trend anymore. You're learning to listen to those subtle whispers from the market before they turn into a roar. So the real question is, the next time you hear that whisper, what are you going to do? Thanks for tuning in, and we'll catch you on the next one.